Over the last month, a bunch of you who inquired about what's happening with the market asked, is the market crashing? Should we wait? And my answer, backed by 21 years of data, surprised all of them. Because the truth is, there are actually 4 completely different markets happening in Calgary right now. Today, I'm going to walk you through exactly what December 2025 looks like and what it means whether you're buying your first place, moving up, downsizing, or even relocating to Calgary still, because I know there's still you that are moving here. So if you want to get the full market report that we have for this month, the link is in the description. It's a free download, and it's got everything in there with a lot of commentary, more than what we can cover in this video, with more charts, more information all around the different cities. So go in there and grab that info. So did you know there are approximately 170,000 mortgages that have renewed in 2025 and are going to be renewing in 2026. So how did we come up with this number? Well, the 2021 census had Calgary at 262,000 mortgages in Calgary. And based on projections of population and the way that it's grown since then, it's probably safe to say we've had at least 20,000 mortgages come into Calgary. So about 285,000 mortgages. There are about 60% of all mortgages in Canada. It's safe to assume that about 170,000 mortgages in Calgary have renewed or are renewing this year. And when renewals come up, what happens? Well, you kind of start wondering, what are your options? Hopefully you're not just blindly signing what the bank sends you, but you're actually maybe going to another broker and you're looking for more options and saying, hey, what are my options here? You might be starting to think about moving. You unfortunately might also be thinking, hey, this is a great time for us to divorce. This might be a great time for us to upsize. This might be a great time to downsize. This might be a great time to put some savings onto our mortgage. Like, what happens at renewals is there's a lot of options and there's a lot of questions that kind of arise. And so we're in the middle of that right now. So if you're waiting for the market to have the lowest of the lowest interest rates that we possibly can right now, well, this might be that time as well. Now, what's the reason I bring these two things up at the same time? Well, look at this chart. Since 2024, we have seen a 2.75% drop in interest rates. Now, is this coincidence? I don't think so. The fact that since January, all the way out to the end of 2026 is when we are going to have the most renewals in our country. And what happened? Interest rates dropped. Now, all the markets, Bank of Canada, everything else is kind of pricing in now that prices of interest rates are going to start going back up. So what's interesting about this is they brought it down to an interest rate of, I think it's 2.75 here at the beginning of 2025. They've dropped it 2 more basis points down to 2.25. There is slight chance that we might see some kind of drop, like 1, maybe 2 more in this next year in 2026, maybe late spring, kind of different things. But majority of banks, majority of markets are saying this here is the bottom. This is where we are going to be, and we're probably going to be like that for the whole year of 2026. And in 2027, we're going to start going up again. Now, kind of convenient that they were able to bring down interest rates when 60% of the mortgages in the country were renewing. So you might be coming off of a 1.3 or 1.8 interest rate, and now you're looking at maybe 4%. So you still have a big jump ahead of you, but it's way smaller than what it used to be. So at this time, going into 2026, there's a lot of you that are kind of questioning what you should do and where you're going. So let's look at what the numbers are saying for the month of December. As you can see on our chart, the inventory compared to sales. So inventory is blue, sales is red. We have a big gap that has been created over this last year, which we know. The last couple years, it's been much, much smaller, and 21 even had a big gap. But these last 3 years, we've seen a very, very, very different market than what we are seeing right now. The benchmark price, it actually has adjusted down to about $559,000, which is about a 4.6% drop compared to last year. And if you start looking across the city, there's like some trends. There's some trends that are happening here. So the areas that we're seeing the biggest decreases, it's kind of the same as we saw last month, is in these areas here, in the north, northeast, and the east. And the areas that we're seeing the least amount of drops is actually the west and the northwest. And so by looking at this, you can kind of see there's like a little bit of a division here, right? There's different types of properties, there's different prices of properties, and there's like there's also like a lot of new builds in some of these areas too. Like there's a lot of factors. At the beginning, I said there's like 4 different types of markets that we're in right now. And there really is, because the 4 different major property types in our city, the apartments, townhomes, semi-detached, and detached properties, they're all acting almost independently. So if you're planning on moving up or moving down and you're switching categories, let's say, you really want to understand what's happening in that category in that neighborhood or that area or zone that you're wanting to move to. And that's the type of analysis that we do with all of our clients all the time, because it's so vital to understand exactly what's happening in those markets. So if you want help with a move in 2026, you want to share your story so we can give you some insight, so I can give some insights into what is going to be good for you, just go to the contact link in the description, go to the QR code up here, and let's chat. But let's also take a look at what is happening with new listings. So new listings this month, we only had 2,251 new listings. That is definitely down compared to last month. Last month we had 3,200 new listings, but it's very seasonal. This is expected. To be honest, again, like last month, I thought there'd be more. I thought there'd be more people like rushing to the market, putting stuff on, concerned over supply, that kind of thing. But it's following, it's not the highest, like it isn't. And when it comes to the number of sales per month, we are actually sat at 1,553 sales in the city. Now that's 13% year over year less. So the yellow line you can barely see up here is where we were last year, and black is where we are this year. The green you can kind of see a little bit better, but that's 2023. And so we're less than we were last year, less sales, down 13%. It's basically a seasonal drop again. We're definitely not sitting in this range down here, which is a good thing. So there's still some demand in some parts of the market, and we'll get to that. Now, inventory per month. Total inventory is actually sitting at 5,581. So you can see that right here. Last month we were sitting at 6,400. And again, we aren't sitting in this market that is up here, right? We aren't going into the 7,000s. We don't have this increase of inventory because, again, certain parts of the market are really tight and some aren't. And so it kind of is keeping at bay. Now, if you're planning on making that move, if you want to move up, you want to move down, you're trying to figure it out, I do want to encourage you that there could be some really good opportunities out there. There really still could be. Here's what I mean. So let's play a game. Let's say you're now sitting, let's say you bought your home, a detached home a couple years ago, like 3, 4, 5, 6 years ago, for around 500,000. Now that home has jumped up and now you're kind of sitting in 657, maybe somewhere in there. And so you're kind of looking at going, we have extra equity, we have good jobs, things are good, we've saved up, we've got paid down our mortgage, like you're in a good place and you're going, okay, we want to move up to a bigger house, but we're going to need to probably jump into something over 9, right? We don't want to go to 1 million, but maybe 900,000, 950, let's say. And so now what's happening in the whole city, if we look at that 650 to 750 range, the whole city is flirting with the seller's market in that price range. Hold that thought. Then when you start looking, let's say that 900 to 1 million, if you're looking at kind of the 9 to 950, that's sitting in a much higher balance market at 3.5, where the 7 to 750 is sitting at 2.4. So you're sitting in a seller's market in the 700s, but you're buying into kind of a really good balance market. So there's literally potentially a perfect scenario for some people in the city when you're planning on moving up to that next property. I know for us that over the last 3 years, as our girls got older, it just got to the place where we just needed more space. Like, we could have stayed in the little bungalow that we were in before, but we just got to the point where we were like, you know what? Let's just have more space. We want to be the house that the friends can come over to, and we can invite families over, and we want our girls to invite their friends over to our house and hang out, and they kind of disappear. And so we made a choice, and it was a really good choice. And I know there's a lot of families in the city that are thinking the same thing, and this could be a good opportunity to do that. Now, this isn't talking about specific neighborhoods or zones or property types or anything. This is just basically looking at price points. But I wanted to show you this because there's actually opportunities in our market for those that are open to it. Now, when it comes to months of inventory, we are currently sitting at 3.59 months of inventory, which is right here. Now, as you remember, a couple months ago, we flirted and went into that buyer's market, but the market quickly came back down. And there was certain product types like your detached, semi-detached that kind of got snapped up and pulled that market back down and got tighter. Now, if we look at the months of inventory, so if a months of inventory, again, is how long will it take everything to sell off at the current pace of sales based on how many actives there are right now. Let's pretend that's the real definition. I think that's right. But what you can see is there's a 30-day and a 90-day months of inventory on this chart. And the 30-day is telling us where it's going in the short term, and is the 90-day going to follow? This is the first month in a long time that I can recall that we have seen the 30-day number higher than all the 90 days, every single one. This is the first time. So what that means is that the market overall seasonally is just slowing down. It's typical. We're walking into Christmas. It's November, December. We've kind of felt it as a team. We've noticed, hey, things are kind of slowing. People are pausing. Even the views on videos are slower. Like, everything's just kind of breathing. And that's okay, because I know spring is coming. I know things are going to be different next year. Things are going to continue in certain products, certain price points, certain areas, right? And so that's what's happening. And that's the first time that's happened in a while. Now, what is also happening is if there's 100 homes that sold last month, there was 102 that could not sell. What has happened is there is some severe pricing misalignment still in our market. There's 102 homes that went off the market. They expired or terminated, or they were like frustrated and couldn't sell. They withdrew their listing, right? But there was 100 that sold. So we had 102% of off-market properties compared to the sales, which is kind of wild. So let's break this down a little bit. So if we look at the different zones of the city, on the screen you can see we have the 90-day months of inventory. So I also kind of overlaid that into this chart, which is a little bit different. But you can see right away the Northeast is at 177%. That's wild. 100 places sold and 177 could not sell, and they took it off the market in just the Northeast. That is insane. The actual real number was 167 sales and 296 could not sell. Like, that's wild. Okay. City center, the East zone and the North zone, all of these areas here on this side of the chart were actually 100% or more. Now, on this side of the chart, your Northwest, your South, your Southeast, and your West, the highest one was the Southeast at 90%, and the lowest was South at 79%. So there clearly is some severe pricing misalignment that is happening in the Northeast, the North, the East, and the city center still right now, because there's more properties that just aren't selling for what they should sell for compared to what places are selling for, and especially compared to the other 4 neighborhoods or 4 zones, right? So that's something that's really interesting to understand. And then when we look at the property types, this tells a whole other story. Your apartments are sitting at 5.5 months of inventory across the whole city right now, and 145%. So there was 307 sales that happened last month for apartments and 448 that could not sell and got taken off the market. And there's still 1,500 active listings on the market there. That's pretty crazy. Now, detached homes are sitting at 2.9 for the months of inventory, and they're sitting at 87%. Full duplexes at 75, but there's like a handful of sales you can see. Row homes, townhomes are sitting at 3.5, so they're in a balanced market, but they had 113, so they're over 100% as well. And semi-detached are sitting at 75% for their off-market compared to sales. So you can kind of see which markets, which zones, which product types are actually doing better than others. So there are multiple different types of markets happening in our city right now. And so I want to show you something we haven't done before. And I pulled these numbers and I thought this was really, really fascinating. So let's play a game. Let's look at what are the best and the worst zones for different product types. So where are they going the fastest and where are they going the slowest, okay? So let's go through and let's look at the best right now. So the best detached zone is sitting at 2.3 months of inventory. And that is your Northwest, okay? The worst is sitting at 4.21, and that is your Northeast. This is going to look like a Christmas tree with all the green and the red here shortly. Now, the best semi-detached is actually, I'm going to make sure my line is done well here. Oh, that went a little too far, but it's in the south. So is the south zone. And the worst for semi-detached properties is the Northeast. Okay. Row homes, the best zone for row homes is actually the Northwest. So we have 2 in the Northwest and 2 in the Northeast for the worst so far. Now, the worst for the row homes, can we guess it? Is the Northeast. Sorry. I'm not making this up, honestly. This is literally what it is. I'm not trying to like say one area is good or bad. This is what the stats are. Now, for the best apartments, it actually is at a different place, and it's actually in the West zone. So if you have apartments, condos in the West zone, they're doing the best out of all apartment types in the zones of the city. Now, the worst apartments you would think might be where? City center? Nope, you're wrong. The worst is actually the Southeast. So this is our little Christmas tree of the best and the worst areas in Calgary, and for zones based on property types. So you can clearly see that there is kind of a good hot spot in the Northwest. There is a not so great of a hot spot, I guess, in the Northeast. And then there's a few others out there as well. So do with that what you may. But I thought this was fascinating. And if you like it, put in the comments and we can kind of track this more and bring this up more in the future too. Now, this is where I also want to talk about what are the top performing neighborhoods and the worst performing neighborhoods as of this last month. So just 1 month's worth of months of inventory. What happened this month? So the top performing neighborhoods are all in the green dots here, which is, the first one is Citadel, which is right here, sitting at 1.6 months of inventory. The second one is in Tuscany, right here, at 1.9 months of inventory. Cranston, down here, sitting at 2.24 months of inventory. And Evanston, up here, sitting at 2.16 months of inventory. And our 5th best performing neighborhood in the city was actually Killarney and Glengarry, which is right here, sitting at 2.26 months of inventory. Now, if you want to talk about the worst ones, we have Falconridge was the worst of the worst, sitting at 38 months of inventory. Come again? 38 months of inventory in Falconridge. Montgomery, which is, I think this is this one here. Oh no, it's this one here. Had 31 months of inventory. Okay, that's a lot. Parkdale had 24 months of inventory. Country Hills Village, which is basically all condos up in the north, had 20 months of inventory. And Greenwood, which is all like condo, townhomes, new stuff by the Calgary Farmers Market, was sitting at 16 months of inventory. So some of these worst areas are some of them to do with like more rentals and like investments and things like that, where they're just probably trying to like sell for a profit, but the profit isn't there anymore. For Falconridge, I would assume. Montgomery, you could have a lot of newer stuff, infills, things like that. Parkdale, again, just that mismatch of market right now. Country Hills Village and Greenwood are basically apartments, where Citadel, Tuscany, Cranston, Evanston, those first four here are very much your suburban neighborhoods, right? And they're moving really, really well. And they're not necessarily, like Evanston's kind of in that north part, but it's more northwest, because all the new north stuff that's like up here, that stuff is hurting, like your Lewiston, and like it's much, much slower. But then the Killarney, Glengarry, I mean, that's just classic inner city. Things are doing well there. So I hope this has been helpful, and I hope that you have so many more questions about the market. So if you do, reach out to us, go to this video up here and grab the market report for this month, and we will see you in the guide, and we're going to see you in this video too. So have a great day.